Hi, I want to talk to you all about a few different loan options. It's always best to speak with a mortgage lender, but sometimes you want to reach out to your realtor first. Let them know your situation and they can guide you towards the best lender for you. Every lender has different options. Most lenders offer the typical loans, but there are specific lenders that have their own options. The first option would be a conventional loan. And with a conventional loan, you can put a down payment of 3 to 20%. You can actually do more than 20%, of course, with a conventional loan, but those are the typical down payment options that people choose. When you utilize a down payment option of 20% or more, you do not have to pay what's called PMI. And PMI stands for private mortgage insurance. And private mortgage insurance can add anywhere from $125 to $150 on top of your monthly payment. So if you go with the 20% down, you can significantly lower your monthly payment. The second option that's pretty common is an FHA loan, and that's typically for people with a lower credit score or a higher debt to income ratio. It doesn't have to be that way, but when you do an FHA loan, the lowest amount that you can put down is 3.5%. You can couple that with a THDA program and do a 0% down. But with an FHA loan, you will always have PMI and that will never drop off. As with a conventional loan, once you hit a certain amount with your payments, the PMI will automatically drop off. That never happens with an FHA loan. There's also a VA loan, which you would have to be a veteran or active duty military to qualify. With a VA loan, you put down 0%, and they do charge what is called a funding fee. Now, if you have a disability rating, typically the VA will cover that funding fee. If you do not, that funding fee may need to be covered by the sellers. And with an FHA and a VA loan, the appraisals work a little bit like a second inspection. So if you were to get a private inspection on your own, you kind of going to have a second inspection when the appraiser comes out, and they will flag certain things. I've had them flag chipped paint or peeling paint on the outdoor door frame. So because of that, some sellers don't want to accept offers from buyers who have an FHA or VA loan. So it's always good to get a disability rating if possible, even if it's a 0% disability rating. A lot of times the VA will still pay for your funding fee. Another option is a USDA loan, and that's another 0% down option. It's a rural loan, whereas it's not available in urban areas. So within the city, you would not be able to get a USDA loan. More than anything, you just have to check the USDA eligibility map. Now, some other options that are not very common are lender-specific loans. Right now, Regions has a 0 down loan with no PMI, and that loan does have income limits. So I think the income limit, they just raised it to $100,000, and that's per household. So that if you're married, that would include you and your spouse. ORNL also offers a 0 down conventional loan, but they only lend up to, I think, $350,000 on that loan. Both of those options do not have PMI, so they're great loan programs to go with if you're in that lower income bracket, if you're single trying to buy a home, or like I said, if you're looking for a home that's less than $350,000, those are great options to go with. Typically, their credit score, I think, does have to be a little bit higher than FHA. So if that's an issue for you, then it may not be the best program to go with. So with all those options, again, the best thing to do is to speak with a realtor and just kind of discuss your needs a little bit, what you're planning to do, what your down payment options are going to look like, and then they can guide you to the best lender for your needs. I hope this helps, and if you have any questions, please comment below, send me a direct message, call me, text me, whatever easiest for you, and I'll be happy to help you.